GM, welcome to Web3 Academy, your one trusted source to capitalize on the next big phase of the internet. Don't get caught in the hype cycle. I'm Jay Bird, joined by my co-host Kyle Reedhead, and we believe that sustainable business models are going to change the world. That's why we're carving a path for doers to confidently build and invest in Web3.
Feels like crypto is somewhat maturing, although it's hard to say that, to be honest, especially if you're on crypto Twitter. But Uniswap Labs has finally launched fees. It's probably not what most of you were thinking, but we're going to talk about that. There's a lot of controversy there, so we'll cover what's going on with that. There's also some concerns around KYC stuff with Uniswap, but we'll clear the air on that one. Good things happening in the space, in my opinion, except for Reddit. Reddit has dropped community points. We're going to cover all of that. Yuga Labs has been doing some pretty cool stuff, and their CEO has given a nice feedback and sort of idea of everything that's going on in the Yuga Labs world. So we're going to talk a little bit about that, and then a bunch of other things. Twitter is launching $1 fees to use the platform, and so much more. So we'll cover all these things, plus some market watch stuff. There's some craziness this week in markets, so we'll cover that. But before we do that, as per usual, Jay, what are you grateful for?
Yeah, I am grateful for my coffee maker. It's just a classic drip coffee maker. I'm back at home. Well, I'm in Toronto at the house that Kyle and I first lived together in. Many memories here. I haven't been here in a while. Probably haven't been here in 9 months. We usually just rent it out. And we got this just a great drip coffee maker. And it's just reliable, It's just, I love it. It's reliable. It's simple, on off button. Let's go. Give me some caffeine. Grateful for that. How about you, Kai? What are you grateful for today?
I am grateful for the Web3 Academy community and podcast listeners. It's been a long, drawn out bear market with a lot of crap that's happened. And a lot of people have left this space. I was talking to a few other Web3 crypto podcasts the past couple of weeks, and a lot of people have seen a big drop off in their audiences and views since summer, basically. And so those that are still here, that are still listening, that are still learning, that are grinding, building, investing, whatever you're doing, you're the true people, you're the true believers, and we appreciate you. People that continue to stick around in this space that are going to help the space grow and make it out of the hole that we're currently in. And so kudos to all of you that are still here, still listening and grinding. Appreciate all of you. And so I'm grateful for all of you.
Grateful for you as well. I love you guys and girls. Love you all. All right, before we jump into some market watch, we got some exciting news. It was the end of the first week of the on-chain gift shop, ended yesterday, and everybody who entered the raffle won a prize. We had 26 prizes, and we had 23 winners. So everybody won. Way to go. If you entered the raffle, you won a prize. We'll be contacting you to let you know what prize you won. So check out your email. We gave away 20 mystery boxes. We had t-shirts. We had a one-on-one call with me. We had a Web3 Academy Pro subscription. So many cool things. Also, we have one winner for the cash prize. It's a wallet address, so I don't know who it is, but we'll be contacting you because you won $118 in the weekly cash prize, and that's just week one, so you can expect next week that cash prize to go up even higher. So make sure you're collecting the Web3 Academy newsletter. You collect our newsletter, and then you go to the on-chain gift shop and you can enter into win the cash prize every week, which is probably going to climb, be well above $100, I would imagine, very soon. Week 2 starts now, and in week 2, not only do we have the cash prize, we've got another raffle. The week 2 raffle includes the main prize that you can win is a Hashverse artifact. This is a in-game item for Hashverse, and I'll tell you what the game is in a second. But this in-game item is currently, the floor is around $500. So a great in-game item, regardless of whether you play Hashverse or not, because it's an NFT, you could sell it if you don't want it. We also have a Web3 Academy Eyes on Chain hoodie to give away and a Web3 Academy Pro membership. So many great things that you can win. I just want to tell you a little bit about Hashverse for those who haven't heard about it. Hashverse is a trading game, team-based trading game that brings communities together all around the Hashflow ecosystem. Hashflow is a leading exchange, but here's the cool thing about Hashverse is, yes, it's a game where you have characters and it's all set on this world. I believe the world is called Renova, if I'm correct. and it's like a typical battle game. You're playing with your team, but within this game, you're also learning DeFi trading and technical analysis. So it's like a fun way to teach you how to do some great skills that are going to help you level up your crypto trading. And you get rewards if you complete quests that lead to your skills and your learning. So it's a really cool game, really fun. And you can enter the game for free. All you need to do is go to Hashverse, their website. We'll put the link in the show notes. And you can set up a Hashverse character. It's free to set up a character. You only have to pay the gas to mint, but otherwise it's free. And then once you have a Hashverse character, you can start to play in the game. And anybody who has a Hashverse character, there's over 5,000 Hashverse characters that have been minted. Anybody who has one, you can enter the on-chain gift shop this week and get involved in the raffle to win the Hashverse NFT. It's a Hail Mary. It's this machine gun that does amazing things in the game and battles, and apparently will help your team win, but will also, as we said, it's worth $500. So it's a great prize. So make sure you guys get involved in the on-chain gift shop this week. Check out the links in the show notes. And yeah, best of luck to all of you. I hope you win something cool in the on-chain gift shop this week.
Amazing. So make sure you go collect, either if you're part of the Hashverse world or you want to collect one of our newsletters. Either one will get you in. So all good things. All right, let's get into this. But before we do, we'll talk about some market watch, and then we'll get into Uniswap and Reddit. Before we get into that, let's just take a quick second to hear from our sponsor.
Modern newsletters are built on Paragraph. That's right. Paragraph is a brand new newsletter platform that combines the best parts of Web 2 and Web 3 to supercharge newsletters for both writers and readers. Build a community, not just an audience. Paragraph uses blockchain tech to allow readers to collect and own the words that matter to them. This takes reading a newsletter to the next level. With Paragraph, readers can mint, collect, and show off quotes from their favorite newsletters. This opens new possibilities like creators sharing revenue with fans. I also love their new feature, Paragraph AI. This integrates GPT-4 natively in Paragraph to create, edit, and improve your writing effortlessly with one click. And guess what? We at Web3 Academy are on board and have already moved our content over to Paragraph. We believe this is the future of newsletters because of the profound engagement it creates between creators and fans. So, whether you're a creator, writer, or an avid reader, it's time to check out Paragraph and capitalize on the opportunity of being early. All right, welcome back. As we always do, let's start out with some market watch. Kai, what's going on in the markets this week?
Well, if you can see the screen, if you're watching on YouTube, this tweet is what controlled all the markets this week, which was just wildness. It was a tweet from Cointelegraph. You probably heard about it. It's no longer exists. They deleted it, but it said breaking, SEC approves iShares Bitcoin spot ETF. This came at some point in the morning on Monday. It was like 9 o'clock or 9:30, I think. We were just going into a meeting with our whole team, and we were in there sitting there, and I was like, does everyone see this tweet? I gotta say kudos to the Web3 Academy Twitter team, because they were like, that doesn't seem like it's legit. Let's hold off on sharing it. Let's hold off on reporting this. And so we held off, and the markets, after this tweet, markets went from about 27,500 Bitcoin up to 30,000 within 30 minutes. And then in the middle of, so we were like, okay, cool, but let's just kind of sit on it. And then all of a sudden in the middle of our meeting, I looked and I can see it, the price is starting to go back down. I was like, what's going on here? A bunch of people started questioning this tweet. Turns out that this tweet was fake news. It was based off no evidence. There was not real. The SEC did not approve any Bitcoin spot ETF. They came out afterwards and said that they thought this was true because of some source in a Telegram group, which is, you should never get your sources from that. But this tweet made its waves, and even Bloomberg put this in their terminal, which Bloomberg is the highest quality of market analysis and market news research. And this tweet made it into Bloomberg, which was kind of crazy. But as a result of this, so Bitcoin went up to 30,000, then back down to 28,000 within another half hour after that, which is a pretty wild ride for anyone that was watching, just kind of going what is happening right now in markets. And yeah, I mean, here's the thing that I take from this. first of all, we need to be careful on what news we're reading and what news we're actually taking as serious news, because as a result of this, $100 million was liquidated in shorts. So this is people that were short Bitcoin before the news came out. Then obviously it rocketed up. Bunch of people got liquidated. But probably what happened is a bunch of people then went long thinking that this news was true, and they got liquidated again. So it's pretty brutal. So we got to be careful of the news that we're taking. 2, don't use leverage. I think I say that every week, or at least I need to say that every week. But the third take from this is obviously there's some demand here, right? Within 30 minutes, Bitcoin's price went from 27.5 to 30,000, right? Now, how much of that is just traders trying to capitalize on being first in this news? I'm not sure. But ultimately, I think it showed that there is demand. And whenever this thing goes live, the fact that it made it to 30 grand and then went down because the news was actually fake, if this was real, that demand would have continued, I think. And so I think this would have went much higher than 30K. So it shows there's people waiting for this. People are waiting for the legitimacy of Bitcoin to get approved here as a spot ETF. And so I think we got a glimpse of what's going to happen when this thing goes, and we're pretty sure it's going to happen by now. It still has a 90% chance of happening in 2023. It's interesting. We talked about Eric Balchunas, who gave it a 75% this year. And then all of a sudden they were all delayed, and we were like, God damn it. The rest are now the next time they have to give the answer is January 10th, which is 2024. But actually after those all being delayed, they've upped their chances to 90% now. Because they think it's going to get approved before the date that they have to. And the reason they're saying this is the SEC is working with a bunch of those who filed, the companies, to fix a few different things. We talked about this, I think, maybe 2 weeks ago. But since then, Cathie Woods has updated hers. So that's the ARK 21 shares one, I believe it is. You have BlackRock has also updated theirs. And then you also have Fidelity's updated theirs. I think 5 or 6 have. Plus, we've had some ETH spot ETFs that have been filed this week as well with Galaxy and Vesco. I think there's about 4 or 5 ETH ones, and then there's 8 or 10, and most of those Bitcoin ones have been refiled to what the SEC has been working with them on. And then Grayscale also just this morning has resubmitted. It's a different filing. It's not like the others because they're trying to convert their trust. But anyway, all those things have now happened. So we're kind of just, now it's back on the SEC and we're waiting. And so 90% chance of it happening this year. So I don't know. Let's see what happens. But that's basically the only thing that we're waiting on in markets at the moment. Now, that said, if you're a pro subscriber, we just released a really, really big report. It's my longest pro report I think I've ever written. So sorry about that, readers. As I said last week, I was going to write something with about 30, 40 charts. And I did just that. I have some of these institutional grade research reports that I'm subscribed to and involved in. And I took a lot of charts and a lot of research from that and basically covered, for those of you who have taken our investing course, when you're looking at markets, you want to look from different angles. You want to look at macro, you want to look at TA, you want to look at sentiment, and then you also want to look at on-chain. And so basically I looked at all 4 of those and compiled it all together into one, and to a point where I believe we're at a really good setup right now. Even though if you're on Twitter, it looks like the world is ending and inflation is going to be here forever and interest rates will be high for forever. I'm not going to get into it here on the podcast because it's just too much to explain, but check out that pro report that went live this morning. It's basically everything that I'm thinking right now, and it'll be very useful for you to understand where markets are at. Jay, how's that for the market watch? Anything else you want?
Solid market watch, man. No, I was just going to jump on the backs of that pro report that you wrote today, that came out today. I really enjoyed it because, yeah, it made me very bullish and got me very excited about where we're at, but it wasn't all from the perspective of on-chain analysis. It was from many different perspectives. And I think that holistic perspective is what makes a very sound investor. So it made me feel very well informed, not just about what's going on chain. It is important to look on chain, and that is one aspect. But you also talked about other aspects, technical analysis, sentiment, that are important macro conditions, important viewpoints to consider that really make the best investors in the world able to do what they do. So Kai, thanks for putting that together. Excited for all of our readers to check that out and get involved and make sure you are feeling confident in your investments.
And by the way, I gave a little bit of predictions of what I thought is going to happen by the end of this year / also into 2024. So do have a look at those, but know that it doesn't mean that I'm 100% right. I'm not always right. And it's all about odds. Whenever you hear numbers from people, predictions, these are about probabilities, right? So the analysis that I put out in today's pro report is high probability of what I'm saying is true, but it doesn't mean it's going to. So it could go complete opposite way. who knows, right? No one knows. No one has the magic crystal ball for markets, although we do wish we did.
That would be nice. All right. I said in the intro that I believe in sustainable business models. It's got to be one of the lamest things I've ever said in the intro. It's not the most sexy thing, but when we talk about the reason why I said that is we have Uniswap launching a new fee this week, which I believe is a great thing and a step towards them ensuring that they have a sustainable business model. Kai, what's going on here?
Yeah, so this is really good timing, actually. It's very interesting timing. So first, we put out a report, was it last week, about Uniswap, how they've generated billions of dollars to liquidity providers and billions of dollars of value accrual to protocols. We talked about it on Monday's or Tuesday's podcast as well. And then a couple of days later, all of a sudden Uniswap and we said that Uniswap makes no money though. That was the kind of the odd thing from it all. And then literally like a couple of days later, Uniswap announces that they're turning on a fee switch for their front end wallets and their application. And so now they're going to earn 0.15% of all trading volume on just a couple different pairs like ETH, I think USDC and a couple others. So very interesting. There's two reasons why I think this is really key. One, because we just put out and said that they didn't make any money. Two, because we always talk about how companies in crypto need to have sustainable business models. If they're not profitable, they're not going to be around forever. And then we have a big problem. And unfortunately, we have a problem in this space because most of our companies do not have sustainable business models, including our number one application, which is Uniswap. And so, interestingly, Uniswap is now launched. The amount actually in our newsletter is actually not correct. I think they made $80,000 in their first day. We were looking the chart that we have up on there that said 500K a day, and they'll make way more than this eventually. But this is looking at all volume, but there's only certain volume that this accounts for. But anyway, regardless, when Hayden Adams, the CEO and founder of Uniswap, tweeted this out, people lost their minds. Okay. First, the Uni token tanked by, I don't know, like 10% or something at least. And a bunch of people were so mad that they didn't turn on the fee switch for this to go to Uni holders. So what this is Uniswap Labs that's going to make 0.15%, not Uniswap DAO, which is all the token holders. This is the centralized company that built Uniswap and continues to develop Uniswap, the protocol, but also develops Uniswap, the app that's in the Android and iOS store. That's the front end that most of us use for Uniswap. So it's that company. Now that company has hundreds of employees and they're a legit company in the US that needs to pay lawyers and pay for an office and blah, blah, blah. So like they need money, right? Obviously. Otherwise, Uniswap Labs goes away. If Uniswap Lab goes away, it's one of the most innovative companies we have in the space. That'd be a very big problem. Uniswap DAO, on the other hand, is just a governance token that governs the protocol of Uniswap. Now, let's be clear. There's two different things here. There's the decentralized protocol that lives on top of Ethereum and other chains that's governed by a token, okay? That thing is permissionless. It's decentralized. It does its own thing. Uniswap Labs is just a company that works on the front ends that interact with that protocol, okay? So and Uniswap has an app and a wallet, all that kind of stuff, kind of like MetaMask. And so this fee that Uniswap is now charging is kind of like the MetaMask swaps fee, where if you swap within the MetaMask wallet, they charge, I think it's like, I don't know, 0.25% or whatever they charge, I don't know. Uniswap, same idea. So people are upset that this isn't going to the Uniswap DAO. And the thing that is frustrating to me, and I think that people just really need to wrap their head around in this space, is people in Uniswap DAO that were airdropped free Uniswap tokens or might have bought Uniswap tokens because maybe they want to govern it or they just want to speculate on it. They have not done anything for Uniswap, right? They don't build the Uniswap protocol. They don't build the front ends for Uniswap. That's all Uniswap Labs. We need Uniswap Labs to exist and to keep building so that Uniswap continues to improve, which it does. They're now on V4 almost of Uniswap, which is like, and they're creating just an incredible application. And so we need Uniswap to make money. And so I don't know why people are so up in arms that they're not the ones like that. The reason they're mad is because it's not going to Uniswap holders. They want the token holders want to get the revenue, which just doesn't really make sense. Like, what are they doing to deserve revenue? Why would a company just leak out value like that? Like, people are just not super rational in this space. And you got to give credit where credit's due. Like, Uniswap Labs should make money off this. It's their product that they created. And here's why I think this makes sense and what people are mixing up. The reason why it's okay for Uniswap to do this is, one, it's 0.15%. That's the lowest I think I've ever seen a tech company charge for like SaaS or for a service, right? Like that's so cheap compared to norms. Like Stripe charges 3%, Apple at the App Store charges 30%. So like the numbers are just insanely small. But also because Uniswap protocol is a permissionless decentralized protocol, which means anyone can build a front end on top of it that people can use where you no longer have a fee. So no one is forced to pay this fee. You only pay this fee if you want to use the front end that Uniswap created. There's thousands of other front ends for Uniswap. And there's also many aggregators like 1inch that use Uniswap, where if you use that, you don't pay that fee. It's only if you use the front end that Uniswap created. And so you have a choice. You can build your own front end, right? And compete with them. You could charge your own fee if you wanted. If other people use your front end, you could make money off it, right? Regardless though, all those transactions still come through to Uniswap protocol. So liquidity providers make money and more liquidity goes to Uniswap. So like this is just a very good thing. And it also, the one risk that Uniswap had when the SEC was like all over Uniswap, I think it was last year, they came in and the one thing that they could do was tell Uniswap Labs to, block their front end, right? They could block certain addresses from using it, et cetera. And they can do that. The protocol can't. So people could always go around and use it. But that was sort of like a centralization risk. And so the more front ends that we have, the more decentralized the use of Uniswap becomes. And so by charging a fee, it's probably going to make more competition and more people create more front ends, which again makes it even more decentralized than it is today. So this is actually, and then would also make more people use Uniswap. So like adding this fee just makes the protocol better. It makes it more resistant to, getting blocked or anything else, and likely is going to drive more liquidity into Uniswap as a result of this. Plus, they can continue to build because they don't have to go to business because they make no money. So like, which ultimately would drive more value to Uniswap holders in the long run anyway. I think that this industry needs to mature, and hopefully this is going to help people understand that. And it feels to me like Uniswap is sort of leading the way here. Hopefully other protocols will do the same. I mean, OpenSea already does this, although do they have platform fees turned on right now? I never know. They're back and forth.
OpenSea does not, but OpenSea Pro does. I can't remember which one of them does and one of them doesn't.
Anyway, this is a great thing. This is a bullish thing, I think, for this industry. I mean, there was a bunch of people on Twitter that were supporting this, but there was a bunch of people that just weren't. And I believe that those people are probably the same as the NFT people that get mad when they don't make money off of things that are happy NFT projects. And again, these are probably just young investors that just don't really get it. But if we want this industry to continue forward, then we need companies to make revenue. And Uniswap is the best, and they've created one of the best products that we have in this whole industry. Why would anyone get mad at this?
We're stuck in this sort of mindset that happened as a result of the early days of crypto, this magic internet money. Remember when that was like a term, everyone just kept talking about magic.
I still use that term. I love that term.
Well, I don't love it as much because to me, it's the opposite of sustainable business models. It's the idea that like, oh, I buy this token, this Uniswap token, and I'm just going to get some sort of value coming back to me for no apparent reason, just because it's magic internet money. That's not sustainable business models. I've seen so many people on Twitter recently talk about like, when mass adoption? Where's the mass adoption I was promised? It's like, well, you know what's going to lead to mass adoption? Sustainable business models. That's what leads to mass adoption. Not a whole bunch of us expecting to get payouts because we bought an NFT or we bought a token. You have to add value, and then maybe you'll get a payout as a result of it. So yeah, I think that this is all part of the word mature is a great word to use. We are maturing. It's a good thing. We need to mature as investors and as users and participants in the space. And we need our businesses to mature as well, because everyone else, you're not helping us move forward. You're keeping us stuck in the past days of thinking that we're all just going to the moon for no reason. No, that's not the way this works. And sure, there was a period when that happened, but that's hype cycles. That's not sustainable. So I think it's all a good thing. I love the fee. As you said, Kai, the fee is low. One other thing that came out sort of around the same time as this story was Chris Black, who is not my favorite influencer by any means, made a tweet that said KYC is coming to Uniswap. And basically, he does not understand, and a lot of people do not understand.
He has to understand, though. He's not.
I know. I
think he just spreads. I think he just likes to pump his like engagement. I think.
I get that a lot of people don't understand the difference between Uniswap, the front end app, and Uniswap, the back end protocol, right? And as Kai said, explain the two. And Uniswap, the front end app, is run by Uniswap Labs. Back end protocol is run by Uniswap DAO. There's a difference. And this KYC is on the front end, on Uniswap Labs, on their app, right?
Not even that. So this is a hook. So Uniswap v4, the new version that's coming out, has hooks where anyone can build any feature they want on top of Uniswap. And one of the hooks that people are experimenting with already is KYC. So Uniswap Labs isn't even doing this. It's not on Uniswap. It's not on Uniswap protocol. It's on nothing at the moment. What it is just the ability to add this on. So does Uniswap Labs do this? I don't know. Probably not, to be fair. What they'll probably do, or another company will do, is create a whole new front end that will be KYC'd. And the reason it will be KYC'd is so that banks and institutions can actually use this and fit within the regulatory environment. So he's out here saying KYC is coming to Uniswap. Uniswap's trash. It's waste because it's all KYC. What's the difference between Uniswap and a normal bank? And again, what people are just completely missing the fact is the permissionless protocol of Uniswap still exists. Anyone can use it. Anyone can build a front end that does not have KYC. Anyone can build a front end that does not have fees, right? But then also anyone can build a front end that does have fees or that does have KYC. Now, why might we have both? You might have someone build KYC so that our banks can use it, right? Institutions can use it. And this would allow access to people to use Uniswap, to use and swap digital assets without ever having to leave their bank. It could go right inside of, let's say, whatever bank you want, right? And so now all of a sudden institutional investors or banks can offer services that utilize Uniswap and it still meets the regulations that are required. That's amazing. You know how much liquidity that brings into our space? Like billions and billions and billions of dollars that cannot come in here unless KYC exists, right? But here's the thing that people are like, yeah, but there's KYC, blah, blah, blah. And it's like, no. Some of it can be KYC'd. You can branch it out and have KYC, but there's always the option to do the non-KYC'd version. And that's the whole point in this industry. And that's the thing that most people are confusing with this industry is they think it needs to be 100% all of it decentralized, right? And permissionless and like, blah, 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 right? And that's because that's how this space was created, right? There's a bunch of contrarian people that really like saw that view, and that's great. It's a great view, and we need that, but it doesn't all have to be that. There's still the rest of the normal world, which is 99.9% of people who don't currently use crypto or on-chain things, and most of the world is going to need the KYC and stuff, the stuff that fits within regulation, and so we need to build for both. And our hope is that most people eventually come out of the regulatory stuff, and we can all be use our own thing, but that's not the reality of life right now and probably not for a long time. And so what's going to happen is most people will use the KYC one. And look, if governments take over and things become a problem, they can always switch out and just go to the non-KYC one and have their own freedom, and that's fine. All that matters is that the option is still there, which it always is. And I think that's the problem that a lot of people are again, spreading misinformation on Twitter.
Yes, super well said. Couldn't have said it better myself, Kai. It's so important to understand the difference and that there is flexibility and adaptability within the way these things are being built, but they will never be 100% only in one direction. That's just not how you get to the whole world.
Yeah.
If we want to stick around with 100 million people and that's all we want, sure. Let's just be decentralized, centralization maxis. Let's make everything permissionless. Let's make everything open source. Let's not KYC, and we won't go anywhere. We'll just
move money around with 20,000 other people.
Yeah, great. Like
the industry has some growing up to do, some realizing about where this industry is going. And so one is these permissionless protocols that will have also KYC on one end of them. And then two is companies making revenue, right? Like everyone, they own some token and they want that to take all the revenue. And it's like, yeah, guys, that doesn't
doing no work.
Exactly.
No work. Like,
there's no free pass in life. No. Our industry goes nowhere if that's what we do. If every single app just starts giving money to the token holders, then our industry's done. So do you want this industry to last or not? If you do, then you got to stop complaining and you got to get out of this old mindset and come with us to the other side, to the side that's going to make it. Anyway, speaking of things that aren't going to make it, there's your...
Yeah, I was just going to say, yeah. It's something that we really thought was going to make it, and we're very excited about was Reddit community points on chain. Let me give you the breakdown of the news here, and then Kai, you can jump in. So Reddit is shutting down their on-chain community points. These were an ERC20 token that was on Arbitrum Nova, and basically it allowed communities within Reddit, specifically a few, less than 10 were using this because it was in beta still. And the two biggest ones were Moon and Brick token, which were the subreddits for cryptocurrency and Fortnite. And basically this was a way to reward your community members for their contribution, for creating quality content, for being great monitors, for being involved in great conversations. They could get tokens. And the great thing is these tokens have value. They can go trade them, or they can use them within the communities. Like we talked about this a few months ago. This was incredibly exciting. We saw this as the future of how you would manage communities, really, because you could use it for governance, you could use it for financial gain. Like there's so many aspects of this. And Reddit is shutting it down. They announced 4 reasons for why they're shutting it down. One is scalability. Even though they were on a layer 2, Arbitrum Nova, they've said that the program still faced scalability issues and was not feasible to run. I'm a little bit skeptical as to if that's actually true. They said it was resource intensive. This sort of goes with scalability issues, that they had to involve a lot of resources, both in their team. Obviously, they involve a lot of resources in their team. This is something new, but they also were covering gas. And so they said that they had to spend too much money on gas. But again, they were on an L2. Like, how much could the gas have been? And like,
way cheaper than the L2s that we use. Like, it's true. Way cheaper than like your normal Arbitrum or Optimism. So I don't know.
And this is, I think, the real reason why they shut this down is regulatory challenges. There's an uncertain regulatory landscape in the US right now. Reddit is obviously, it's an American public company, and they were not willing to take that risk. And I'll bet that's the main reason they shut it down. And then what doesn't help the situation at all and does not help the regulatory challenges is apparently there was insider trading that took place, and it's pretty clear that maybe there was. I don't know. Like, basically, go ahead.
Here, look. So what happened was, just to give the story before we talk about this insider trading thing, is they said they were shutting it down. So of course, and basically any token that's in your wallet or the vault, the Reddit vault, would just be gone. I mean, they technically can't really do that because they just removed the functionality of points in your Reddit vault. So unless you built your own thing, it'd be tough to get those tokens out. So obviously everyone just sold their tokens. And so basically Moon and whatever the other one is went to next to zero as a result of them shutting it down. So that makes complete sense. But what happened is obviously people had to know that this was getting shut down because they had to tell everybody. And so Reddit told the moderators of the communities that they need to tell the communities that this is all getting shut down. And so, well, the Reddit leaders, I guess, sold some of their tokens either before or right after they told people. Right before the market tanked. So like, we don't know, like, did they write the comment and then they sold it and then everyone else saw the comment and then they sold as well? Like, but I don't know. I would have done the same thing. What do you mean? This company's about to rug you. Of course you're going to sell. It's not like you worked for the company. You spent your time for free to help build this subreddit. And Reddit is going, hey, all that value that you've created, because they earned all these points. The moderators earned points for moderating this thing. And then all of a sudden Reddit goes, hey, by the way, your points, they're going to zero. I'd sell too. What do you mean? And so like, and it's not like they worked for the company. So like, I don't really buy these rumors of what else. Like, I would like to ask anyone else what you would do in that situation. You're just going to hold it and be like, all right, going down with the ship, let everyone else sell, and lose all your money.
Well, and it's a good point. This isn't really insider trading because they had to notify, as you said, the communities about the feature being removed, right? So there has to be a communication plan with these communities. And notifying them the feature, they're obviously aware that it's going to affect their token. It's a tough position. I mean, I feel really bad for anybody who bought Moon or Brick.
There's a lot of Reddit people that are pissed off. I was looking at some of the comments, and people are not so, rightfully so, they are not so happy. I saw a tweet that came out from, I think it was one of the guys from Blockworks, and he basically said his take on this was crypto is going to be built from the bottom up, not the top down. It's not going to be these big guys. I mean, we've already seen Instagram shut down what they were doing and Meta shut down what they were doing. Now Reddit, I mean, Reddit still does the avatars. Like, they're not gone by any means. But my take on why Reddit's doing this probably is just, it's a tough environment out there right now in terms of macro. Interest rates are high. A lot of companies still firing or are very like, if not firing, are shutting down a lot of things. I mean, Meta shut down the metaverse plans that they had. Again, not because they don't believe in it, just because they need to save resources. And so Reddit probably doing the same thing. So like somewhat understandable in that regard, but interesting take of it's going to be bottom up, not top down, because basically saying like these bigger companies, they don't have the need, right? They don't have the like urgency to build this. Whereas the smaller guys, the more innovative stuff, they do. And so I don't know how it's going to work. We've never had companies so big before in our lives, right? Social media, like Facebook is the biggest, most powerful company that exists. And so like, it's hard to say, are we going to get social media companies that come from nothing and beat this? I mean, I guess TikTok did it like 6 years ago or whatever, whenever they launched, but that's not an easy thing to do. So I don't know how it's going to work. We'll see.
Yeah, I think the thing to remember is when you think about the start of the internet, any existing corporations that became the big winners on the backs of the internet,
Right.
It was all new companies. And it's like that with every tech innovation. You go back to the start of the engine and cars, you go back to the start of the telephone and communication, it's always new companies that rise to the top. Because as you said, it's bottom up with new tech because there's not the same motivation from a large company to figure out how to use new tech.
Yeah, except for like, I mean, Apple became a massive internet player and they were not internet, they were here previous to internets. Same with Microsoft. Now they missed the internet for the first 10 years or so. They completely screwed that up, but they came back and now are one of the biggest companies in the world. So like there are some for sure, but you're right. It's definitely the bootstrapped, like brand new ones that kind of lead the way. And then both Microsoft and Apple kind of followed many years later. So I think you're definitely right. You need to be pushed by someone first.
Speaking about pushing and being a leader, we have Daniel Alegre, the CEO of Yuga Labs, who made a public address this week. And shout out to him for making his public address on Twitter, knowing where his audience is. And basically, it's sort of like a state of the nation or a state of Yuga Labs sort of announcement, right? Daniel Alegre took over as CEO about 6 months ago. So he's been there for 6 months. About a month ago, Yuga Labs did a bunch of layoffs. And so he wanted to address that. Obviously, the floor prices of all Yuga Labs assets, all NFTs have been going down. So he wanted to give some motivation and some inspiration to his community to show that like, hey, we're still here. We're still building for the long term. I'm not going to read this whole thing. It's a long tweet and there's some great stuff in it. So you go ahead and read it on your own. But I'm going to highlight a few things. First thing I want to highlight is Daniel says that when he first started, he was given some advice by one of the original Yuga founders. And here's the advice. He said, it will take you 6 months on the job to truly understand this space and the importance of social communication. And I think that that is something that is lost in our space because this doesn't really exist in other industries. The way you communicate in other industries, if you're a CEO, is you communicate quarterly with quarterly reports and with annual general meetings. It's much different communication style. With NFT holders and token holders, as we stated earlier, who get upset when you make announcements like fees and they don't like what you did because they want value coming to them, you have to communicate much more frequently. And Daniel talks about how he might have been a little bit naive in the beginning. And even though he was aware of the importance of social communication, he feels like he's now really seeing how much he needs to be basically an active communicating leader. He can't just work in silent and be heads down. He needs to be constantly communicating, constantly talking. And you can see that from the best leaders in the space. Luca Netz is a great example of that. Frank DeGods. Yeah, we done DeGods last week a little bit, so maybe their project isn't doing so great. But as a leader, he's very active and people like that. And that gives you people a lot of faith in the system. Next is he talks about, okay, what are the core priorities for Yuga Labs? And he says there's 3 things: support our existing communities, focus on other side execution, and leverage partnerships to ensure a seamless execution of our big bets. 3 great initiatives. Now, within those, he talks about Bored Ape Yacht Club. He talks about CryptoPunks. The CryptoPunks part was very interesting because he talked about the sort of rift in the relationship between CryptoPunk holders and Yuga. CryptoPunk holders feel like you guys not prioritizing them enough and haven't been doing enough with them since they bought CryptoPunks and CryptoPunk. And you guys, Daniel's basically saying like, hey, we're really focused on CryptoPunks. We really believe in it. And he says that they're doubling down or even tripling down on their community effort and basically really focused on getting CryptoPunks in more museums is the main thing he says that they're going to do in order to further the brand of CryptoPunks as a leading art project. He talks about Meebits. Kai, you're a Meebits holder. How do you feel about
I thankfully sold Meebits when the news dropped that Yuga was buying them. I sold my Meebit, made like 2 ETH on my Meebit. All the NFT I've ever sold, pretty much the only one I've ever bought, except I have this random Cyber Kong I bought for some reason too. But anyway, yeah, this is interesting. I think I'm trying to think of Yuga Labs. Like, what are they doing? You know, they got these random NFT projects, Mutant Ape Yacht Club, Bored Ape Yacht Club, Meebits. Like, what are they trying to do? And my take from what I read here, and their main focus, as you said, was Other Side, which is their like, basically their immersive experience, their metaverse. And I think what they want to do is make experiences and worlds for Meebits holders, for Bored Ape Yacht Club holders, etc., and like bring digital communities together in a more immersive way, which I think is huge and going to be really cool. I think we're years out for this becoming a thing. So they're very much on the forefront. But what they're trying to do with Meebits is kind of interesting. They were calling it Metropolis, I think it's called, like a metropolis, but with Meebits. And so they want to build a city inside of Other Side for Meebits to go and interact and whether it's play games or like do whatever you do in there. So I kind of see the vision that they're going. You could think of it like a social network, right? Like Facebook, where it has Facebook groups, but instead of this screen where there's just text, it's a world where you go in and you talk to people. And then instead of like logging into a group, your group is your NFTs that you hold in your wallet kind of thing, right? And that's what allows you to access your groups rather than like subscribing to a Facebook group. So like, I think they're taking the Facebook experience, this is my guess of what they're doing, and trying to move it into a digital world. And then my assumption is they'll start that with their own communities like Bored Ape Yacht Club, Mutant Ape Yacht Club, Meebits, by creating experiences for them. And then I think they're hoping with partnerships that other communities will come in. It seems like they're years away from this becoming even remotely close of a thing. And maybe you're going to need some sort of AR, VR before this like becomes actually cool. I'm not sure. But yeah, I mean, luckily they have a ton of capital. I think they raised like hundreds of millions of dollars. Well, probably billions, I would think, like from both raising and then from selling.
Yeah, they raised 500 million from a raise. Plus they have, I don't know if they have 500 million from,
maybe they do like with Other Side. Bored Ape didn't make a ton, but actually they did on royalties for that first like year or two. Yeah. Yeah. So like they got so much money.
Huge. Huge.
But I don't know. It's hard to see what they're going to create. And it's
like, I think they're clearly focused on this like cultural movement, right? They always talk about this, but the thing about culture is it's not tangible, right?
Yeah.
So it's difficult to be a business leading culture. It's much easier to be a cool, hip brand leading culture, but not one that's making a ton of money, right? And I think that they're leaning into that by like, they're doing cool events. They have Ape Fest in Hong Kong. They're bringing their community together. They're doing all of those things, which like, okay, great. You build a really strong community. Does that build a strong business? Not so sure. I'm still really believe in the gaming side for them. And like, I thought they brought in Daniel Alegre because he came from Activision where he was the COO. So you're talking about like, he was part of leading one of the largest gaming companies in the world. And look, gaming, we all talk about gaming in Web3 and the crossover and the potential of it. And who wouldn't want to play like Dookie Dash on their phone and win some NFTs as a result of that, or win some rewards and be able to sell those? Like, those are simple things that you could go to a mass market with. The thing is, I don't know, I feel like Yuga's a little bit in a tough position because they have such high expectations. And expectations are the devil when you're trying to experiment and trying to do your own thing. Because now Daniel Alegre realizes he has to like tell the community what they're doing and please the community, but then also take big bets and take big risks. And those are difficult things to do.
It sucks about having the NFTs and the communities that are expecting them to execute is like, clearly their focus is Other Side. They want to build a metaverse, right? But they can't just focus on that. They also have to go and like create some events for Bored Ape Yacht Club holders so that they're happy, and like get CryptoPunks into a few museums that they're happy. And like, Like they have to do all these random things for these holders that just like, to be quite frank, is probably wasting a lot of their time and resources. Whereas if they didn't have any of those, they could just go and focus on other side. Now, they also wouldn't have 500 million or however much they got as a result of that. So like, I get the balance there, but it definitely holds them back. And the thing is that sucks is I would say other side is 3 to 5 years before.
That's the thing, is it's far away.
Thing legit. And then like, that's when the moment when Meebits and Border Yacht Club and those like would really accrue value, because they have probably something, an exclusive experience inside this thing. That's a long wait for holders. So we'll see what happens in the meantime. But
here's something I am very excited about out of the Ape ecosystem, but this came out of ApeCoin DAO. So in a partnership with another brand called Forge, which is a subsidiary of Animoca Brands, and Animoca owns a lot of ApeCoin. They're not the largest ApeCoin holder, but like top 10 ApeCoin holder in the millions. They can really influence ApeCoin DAO's votes, right? Because in ApeCoin DAO, $1 equals one vote, $100,000 equals 100,000 votes. It's weighted voting. So what they've done is they've launched the Ape Accelerator. And basically there's two arms to this accelerator. There's an accelerator program, which is like an incubator, where if you're a builder or a founder, you have an idea, you can apply to be part of the program, and they will hook you up with investors. They'll give you guidance and advice on how to start a company. They'll help you find the tools. They'll help you with networking on how to find co-founders or how to build your business, just like any accelerator program. Typically, these programs are like 3 months to 12 months in length. And then at the end of the program, you launch your product. And what the other arm of this Ape Accelerator program is a launch pad. And what the launch pad does is it helps you with the launch. So you go through the accelerator program, you come out the other end, and you launch your product. Well, Ape's going to help you launch it. They're going to promote it across their socials. They've got like 11 million reach across all of their socials. They've got a community with over 70,000 members in it. They got a Discord with 200,000 members in it. Like they've got a lot of reach. And so they're going to help you launch it, which is amazing, right? You launch your product. Let's say you're launching, like Ape Water, I think is a product that some Ape holders have created, or there's a brewery with using an Ape. Like you're launching this and they're going to promote that, which is awesome. But here's the cool thing with the Launchpad is they're also giving value back to ApeCoin holders by saying, okay, if you own ApeCoin, then you're going to get special access into the Launchpad. So maybe you get a discount of a launch of a product from within the Launchpad, or maybe you get special access, you get first access to their product, or maybe you can be a user tester early on. Who knows? So very, very cool idea of I think every DAO that's well-funded, every DAO should go do this right now. Have an accelerator or incubator program, and then have a launch pad and help your community members build within your community and like win-win.
It's how you build an ecosystem and get network effects, right? Like Ethereum funds a lot of things on top of Ethereum, because the more things on Ethereum, the more like Lindy Ethereum has, meaning Lindy is like the more that it sticks around and it is harder to like get rid of. Like Ape is the same thing, right? Like you have this, eventually they're going to have this platform and other side, but they have the ApeCoin brand, or so the Ape brand. And so the more things that are using that brand, the better that is for that entire ecosystem. So yeah, a lot of cool things going on with them, and we'll see. I hope that they make it out, because they do have a lot going, but it's definitely one of those businesses that are so far ahead of most others that it's hard to wrap your head around like what they're going to actually be.
Mm-hmm. I don't want to put FUD on one of the leaders in our space, and I really do believe in them, but I guess this isn't so much FUD. This is just a reality. Usually the biggest business in a new industry does not end up being the biggest business long term.
Right.
Expectations are too high. You raised too much early on. You lost your motivation. You moved from founder to another CEO, which if you look at, this is an interesting thing to look at. If you look at the FANG companies, right, which are like Facebook, Apple, Amazon, Netflix, and Google, most of them do not have original founders anymore, except for Facebook, which still has Mark Zuckerberg. And look at the success of Facebook. I don't know. You're in a difficult position, I think, if you're Yuga Labs. I don't envy them at all.
Yeah, you think of like AOL was the first internet provider. basically gone. You had MySpace, the first sort of social media, or one of the first social medias that got really big, gone. So yeah, it's a good point.
You know what is sticking around is Michelin. Michelin Man.
See, look at these. You don't want an avatar of that? These things are sick. Look at the Michelin Man.
Yeah. Kyle likes the Michelin Man. Everybody's favorite, like marshmallow tire looking white ghost guy. So what are we talking about here? Michelin launched the Explorers Club this week. This is a NFT backed club. And Michelin, let's remember, has two main businesses. They have their tire company that they are very well known for globally, one of the biggest tire companies in the world. But they also have their restaurant, guide, and rating company, which people don't realize it's actually the same thing.
So
right?
random.
It's the same company. The reason is because like 50 years ago, Michelin wanted you to drive to use their tires. And in order to get you to drive, they started to make the Michelin guide, which was like restaurants that you should visit while you were driving.
Wow.
And then that Michelin guide just turned into a way bigger business, which is awesome to see. So they launched this NFT collection, 5,000 NFTs available. The minting will be done by the time you guys are listening to this. It ends today while we're recording on Thursday. As of recording, they've sold over 1,700. Oh, no, sorry, actually, over 2,200 NFTs have been minted so far. So it doesn't look like they're going to mint out, and they've said they're going to burn whatever they don't mint. So there's going to be a fixed supply based on whatever mints. Look, they sold these at 0.05 ETH. First thing I would say, way to go. Like, price these very appropriately. Talking about like $80 basically to buy one of these passes. Not a restrictive price, very accessible to anybody who wants to get in. What is the utility of this? Is raffles, basically. You get into this club, you get access to a Discord, and you get a PFP. So like the classic utility of all NFT projects. But then you also get access to a raffle. Right now they have one raffle that's going on where 8 people can win a VIP experience to a Michelin restaurant alongside a Grand Prix. Great to see. And then they've said they're going to have more raffles in the future, which is also really great to see. Look, I think this is a simple, very well executed job by an existing brand to launch a community using a token for that. They did some things differently than I would do. In the minting, you had to connect your wallet in order to mint. You could not pay with credit card and do social sign with your email. That feels a little bit weird to me. I think we talked recently about, well, actually this week we had an episode with Privy come out on Wednesday, which is an amazing episode all about consumer apps. And Michelin obviously has a lot of non-Web3 customers, but they clearly didn't target those because they did not make it easy for those people to sign up. Somebody who doesn't have a wallet and doesn't have ETH. They also did this on Ethereum mainnet, which is also a bit of a weird choice to me, like do this on a layer 2. So they made some weird choices, but on the whole, shout out, great job. You're creating a community, you're using an NFT to do it. Great start.
Yeah, I mean, look, they're PFPs, which I think can be cool to go in your, I mean, they didn't do this as a PFP, they did it as a membership thing, but there's a PFP associated, which I think is great for branding. Companies really need to stop launching these in a way that doesn't access the rest of the world. I was on a call with this, can't really say names, but company that works with a bunch of like big estates of musicians that have passed away, and they want to do this art thing and whatever. And my advice was like, look, there's like 20,000 people in here that care about NFTs and Web3 at the moment. There's not many. And like, you know, maybe a little bit more that actually have a wallet and know how to use it and et cetera. So like, don't do anything these days that forces people to use their wallet. Like if you're a big brand and you're trying to reach mainstream, like you have to hide the blockchain stuff. You have to embed the wallet. You have to do this like a normal Web2 thing, or don't do it. And that might be expensive, and so maybe you can't do it, but like just do not do this unless you do it that way. And I think all brands need to do that. And so like Michelin, like it's great what they did. This could have been way better if they did it without mentioning blockchains all over their websites. It seems a bit like, I don't know why they did it, whether it's just something they've been working on for a while, or just like, let's just get it out there or what. But like, there's way better tech out there now. Why are people still doing this old style way? It makes no sense. You've taken, I don't know how many people are in the Michelin brand. Let's say there's probably hundreds of thousands, millions of people that know Michelin. I don't know how big their socials are, but the moment you make it where you need to connect a wallet and you have to use ETH on Ethereum mainnet and play gas, like you minus you reduce the people that might buy this thing and access your membership by like 99%, which is just, it's stupid. So people obviously are not wrapping their heads around that yet, though.
Hopefully we'll get there sooner rather than later. Kai, are you wrapping your head around the Twitter $1 fee?
Yeah, I am. I actually don't hate it. So what happened here, I'll just give some context first, is Twitter launched like yesterday or 2 days ago, it's only in New Zealand, I think in the Philippines, where unverified accounts have to pay $1 a year as an annual subscription in order to like interact on Twitter. So to comment and post. If you just want to view, you don't have to do this. You can just view. It doesn't really matter. You have to pay. And it's just a test. They're going to see, does this get rid of most of the bots, or how does that work, right? So I think it's an interesting idea. There was a bunch of people losing their minds about it on Twitter, as always. Everything that happens, people lose their minds. Twitter, as much as I like it, I'm a very rational person. So when I see so much irrationality, I struggle and I get annoyed. And so Twitter just annoys me every day. But anyway, people are losing their minds. And the main thing that I saw, which was quite comical, was people saying, we decided that we would give up our data to big tech if they give us these applications for free, right? Which we did. I say this all the time. Now, first of all, we didn't decide that. You know what I mean? I don't think anyone decided. I think people just want to use them and it's free. But that's kind of the exchange that has been like the agreement between citizens and big tech. And they're like, but now not only are you still taking your data, but you're taking your money. And all I want to say is it's $1 per year. They're not taking your money at all. It's just $1. That you probably lost $1 and change out of your pocket at some point this year too. Like it's $1. Okay. So like, no, they're not taking your money. This isn't a thing for them to try to milk you for money. It's an experiment to try to get rid of the biggest problem that we have in social media, which is the tool that we all use more than anything. And bots are a massive problem. And so if we can start to find ways and experiment ways to get rid of it, then I'm all for it. If I have to pay $1 a year to do it, who cares? I mean, I pay $10 a month because I'd rather be verified anyway.
And let's be clear, you can still use Twitter even if you don't pay $1. What they're doing is they're saying in order to have right functionality, like to comment, to like, to engage on Twitter, you must pay $1. And I love that they called this program Not a Bot. Like it's very clear what their objective is here. And let's be honest as well, they started in New Zealand and Philippines. Now, I don't think New Zealand's probably the center of where all bots are coming from, but I guarantee you that Philippines is high on that list. And Twitter can see that. Twitter knows how many people live in the Philippines and how many people are every day from the Philippines building new accounts. And they're probably like, guys, like there's way more new accounts coming out of the Philippines. We got to stop this. Okay, here's a way to stop this. Put in $1 fee. Twitter said themselves, this is not a profit driver. Obviously, it's not a profit driver. And this isn't going to existing users, even in the Philippines and New Zealand. If you're in the Philippines and New Zealand, you're an existing user of Twitter, you don't have to pay this fee. It's only new accounts, which most new accounts out of the Philippines are probably bots.
But also, if they have 500 million users, I think if all 500 million people did this and it got rid of all bots and they made $500 million a year, I'd be very happy. That would be great. Now Twitter can go build more things. You know what I mean? Like the things that we use every day. So many people that listen to this podcast, they rely on Twitter, one for their news, but also probably for their businesses, right? Like a lot of our listeners from our podcast have found our podcast because of Twitter. They subscribe to our newsletter because of Twitter. Twitter is an amazing tool. And if I got to donate $1 to a year to make that experience better, I would do that all day. And anyone should, you know what I mean? I'm just going to leave it at that. Anyway, it's still just an experiment. It's not for everyone yet. Only if it works are they going to push this forward. So like, we don't need to be up in arms. Like let people experiment and try things so that we can make our systems and the tools we use better. Why wouldn't you want that?
All right. Next up is our SBF trial update. I'm going to hit you with just a few things in our SBF trial update because in our next week's, our Tuesday episode, we're going to do a full episode on the SBF trial. So tune in if you want to deep knowledge on what's going on in this trial because it's just too good and we need a full episode on this because we can't get into that episode. Are we doing the episode? Not confirmed on the guest yet. So
okay.
Don't tease who the guest is, but we're going to do the episode regardless because I think that's where we got to go. Because there's just everybody wants to know what's going on in this trial. Okay, I'll give you the quick Cole's notes. So this one I was so good is SBF's attorneys. So they're right now in the trial. The prosecution is finishing their case and they're moving over to the defense's case. And when they move over to the defense's case, the question is, will Sam Bankman-Fried testify as part of his own defense? There's always the question of like, should the person being prosecuted defend? If you watched any legal movies, that's, always going back and forth on this. And basically, right now, Sam Bankman-Fried is not allowed to take his meds. So he has a prescription for Adderall because of ADHD, and he's not allowed to take his meds. So his legal team has now requested to the court that he should be allowed to take his meds, because if he's going to testify, they want him on his meds. They want him on Adderall because they're worried that he won't be able to focus and that he'll, go off script, I guess. Do with that what you will. That's just a bit, that's that. Then there was also a pretty damning recording that came out. So right before Caroline Ellison, right after she finished her testimony, which is probably like the most evidence that's come up. We talked about that last week, where she basically said that Sam told her that they were doing all this illegal stuff and she should still do it anyways. And she knew it was legal, but she continued to do it. So one of the next people that took the stand was this guy, Christian Drappy, who was a former software engineer at Almeida, and high enough up that he was in these like senior level meetings on the Almeida side. And in one of these meetings, somebody, I don't think it was Drappy himself, somebody else recorded the meeting. And so they had this recording, and in this meeting, she basically, I'm trying to find the exact quote, but basically what she says in this meeting is that they have been using FTX customer funds. She admits it in this meeting, and now everybody knows it, and that they're essentially like, they're screwed right now. They got a big problem. They've been using these funds, and they need to figure out a solution to it. And what this led to, like, this guy, Christian Drappy, ended up quitting 24 hours later because he like sat at this meeting and was like, whoa, this is so bad. Peace, I'm out. So he quits after this meeting. Here it is. In this meeting, Christian Drappy says, on recording, he says, I'm sure this wasn't a YOLO thing, he asked her during the meeting. Like, why did we just like all of a sudden decide this? Like, why are we using customer funds? Did we just YOLO into this, or was like this a like strategic thing? And it leads to this conversation where she basically has to say that no, like these decisions were made by the higher ups, incriminating Sam Bankman-Fried. And yeah, here we go again. It's too good to be true. This is made for TV courtroom action.
Wildness. Well, I'm excited for the full episode to get a deeper understanding of what's happening here. I follow it lightly, but I mainly just get my updates from you, Jay, each week. So thanks for doing these on the pod.
No doubt. Let's go into some quick hits before we wrap up. Kai, first quick hit. Courtyard puts another 500 Pokemon cards on chain.
Yeah, I mean, we've talked about this a lot, so there's not much to say here. I think the big thing is they sell out within a second every time they do this. Now, is this speculators, or is this like people who actually really want these things? Probably speculators. I don't know. But either way, I think this is just the beginning, and we're going to see a lot of collectibles, like physical collectibles, go on chain. And so I think it's something we should just continue to watch.
Yeah, the thing I love about this is like, this is just Pokemon cards, right? Like Courtyard, their business model is like all physical collectibles and bringing them on chain. They're just using Pokemon cards as a marketing stunt right now, and look how it's working. So like, wow, there's product market fit. Everybody get excited about this.
Makes me want to start a like holdings. I don't even know what you call them, like a vault where you hold anything. You store wine, you store collectibles, like, because I feel like we keep talking about this stuff. Like you gave the idea of wine where you'd hold it there and you could sell the wine and move it around, but not actually hold on to it, which is just better and cheaper for everyone. And it feels like that's a use case that can work for many things in the physical world. And so like, I feel like we're going to go further into a world where we just have many of these like holding vaults for lots of things, and then just things get traded on chain, which is interesting.
Completely.
All right, next quick hit. Jay, you could go to Gary Vee's birthday. Would you go? How can you go?
I would definitely go to Gary Vee's birthday. So if you are a if you're a V Friends Series 1 holder, you can enter, I don't know if this is a raffle or if this is an airdrop, but basically a select number of V Friends Series 1 holders are going to get an invite to Gary Vee's 48th birthday And guess where it is? It's at Chuck E. Cheese.
Stop.
How freaking fun would that be? Not only you get to be Gary Vee, you get to play games at Chuck E. Cheese, pizza party included. This is just the simplest but great utility done by VeeFriends.
If there's one team that's continued to execute for their holders other than Pudgy, it's VeeFriends.
100%.
Like, yeah. Now, but even their floors dropped like crazy. They're worth like the floor is like 2 ETH, which is, I mean, they were like 1 ETH or something, I think. But
yeah, not getting the credit they deserve, but I would agree.
Yeah.
Okay, next up, Sweat Economy enters the US and 8 new countries.
Yeah, so Sweat Economy is the app that we actually had Oleg, the founder of it, on the podcast, I don't know, months ago. I met him when I was in Lisbon, and it's basically an app that you move around and you earn points, and then you can get discounts and rewards and different things like that. Non-crypto though, so just normal. There's 140 million users. But since then, over the last few years, they gave away where they have another app where you can convert your points into Sweat tokens, actual like tokens of the blockchain, where you can, sell them into the normal crypto economy. You can buy things with them. They have little games, NFTs. So like they've added a crypto version of this. They're probably one of the apps that are onboarding the most people into crypto, but no one's talking about them because it's not near. And so no one really knows, like, you can't really put those, it's not on Dune, so you can't actually track their progress, things like that. They're onboarding the most Web3 wallets, I think, of any application. And they're not even in the US. And now they're finally in the US. So huge deal. I mean, in 6 or 7 other countries. So continuing to see some great growth. And they have a sustainable business model for this. It's not like, what are the other ones? Step in, and the other ones are kind of like inflate tokens or whatever. So yeah, very interesting. If you like to move around, you want to track your steps, I'd highly recommend you get Sweat app.
All right, final quick hit. Hit me, Kai.
The final quick hit of the day is Cool Cats just launched a new avatar system.
Yeah, so Cool Cats, one of the OG NFT collections in the space, has launched a new avatar system. Basically what it does is it allows you to build and customize your own avatar using, you guessed it, Cool Cats IP. Now, this isn't to try to make more NFTs to deflate their current NFT collection. So a couple ways that they're solving for that. One is these are soul-bound NFTs. I think that's really smart. So these are meant to be created so that you can go trade them. It's just for you to have fun, to make a fun avatar. And they also get this is like so classic in the NFT space. They're frontward facing, whereas you guessed it, the NFTs are sideways facing. So that's another way you can tell that it's from their avatar builder, not from the NFT collection. Look, this isn't the first time we've seen a NFT collection create an avatar builder. Doodles also has this, and I'm sure some other collections do. And avatars are big in the space for the young generation. Like, I'm not going to go make an avatar because I don't have a need or a use case for having an avatar online. But if you spend a lot of time online and you spend a lot of time in different platforms, you want an avatar to represent yourself, because most of us don't show a real photo anymore online. We're moving more in this direction of having an avatar that represents us. And that's what Cool Cats understands. They understand the young generation. They understand that these people, want, whether you're on Reddit or whether you're in a game, they want an avatar that is meaningful to them. And if you love cats, you think cats are cute, boom, you can go make one.
Cool, not cute. They're cool cats.
Yeah, you think they're cool. Yeah, you can go make an avatar. So look, I think it's a fun thing. My one beef I would pick with this is it goes back to the beginning of the episode. We talked about sustainable business models. We want to see more sustainable business models. And I'm so sick of seeing NFT collections launch not non-profit generating products. Like, this is a product that will not generate profit unless maybe they plan to charge money for these avatars, but then no one's going to build them. So I don't really see that being the case. I don't think there's a product market fit for avatar builders that's very big. I mean, maybe I'm wrong, but not that I know of. So I would just love to see, hey, if you're an NFT project out there, please focus on building products that generate revenue. And I get one thing I hear from a lot of founders, and I was speaking to a prominent founder earlier this week, is this real fear of charging money for products, because you feel like, oh, well, my holders already paid a bunch of money for their NFT. I don't want to go build a product that I go charge them money for. But you know what? Too bad, so sad. If you don't do that, you're not going to have a business anyways. You're going to be out of business in 6 months. So sack up and make a product that sells for money, because that's the only way you're going to build a profitable business.
Sack up, he says, ladies and gentlemen. Jay is laying down the hammer. Now, thankfully, Cool Cats, I think, got a raise at I don't know how much, I couldn't find it, but from Amico, who you were talking about that holds ApeCoin, they also are the ones that invested in Cool Cats. So like they probably have some runway so they can do this, but many other projects, I wouldn't be copying what Cool Cats is doing, especially if you didn't raise or don't have a ton of money. I'd be focused on other things.
That's a wrap, everybody. Thanks so much for listening in. If you haven't got involved in the on-chain gift shop in week 1, if you missed out on winning one of 26 prizes, awesome prizes. We got awesome prizes coming up in week 2. You could win a Hashverse artifact NFT worth $500. You could win one of our Web3 Academy Eyes on Chain hoodies. You could win a Web3 Academy Pro membership and so much more. And you could win a cash prize. All you got to do is collect our newsletter or get your Hashverse character. Link is in the show notes. Check that out. Have a great weekend, everybody. We'll see you next week.
Thank you for listening to Web3 Academy, your one trusted source to capitalize on the next big phase of the internet. If you enjoyed this episode, please share it and subscribe or follow so that you don't miss the next one. While you're at it, there's a link in the description for our free newsletter where we provide timely and relevant Web3 insights so you can confidently build and invest in Web3. Make sure to subscribe today. One final note. This podcast is for educational purposes only, and nothing we say is financial advice. Crypto and Web3 are risky, and you should never invest more than you're willing to lose. Thank you, friends, and see you in the next one.